to Market Blaster, where we blow apart the stock market and put it back together so that it makes sense for you. I've got help in that task today, joined by Jeffrey Saut. He's the Chief Investment Strategist at Raymond James Financial here in the Tampa Bay area, beautiful Tampa Bay area, home of the Rays, Bucks, and of course Raymond James. And welcome back, Jeff.
It's a pleasure to be here again.
Smart guy with money, it seems like. You know what to do. You made some good calls.
I've been at it a long time, yeah.
Oh, here we are back in your hometown. Boy and I went down there, got a ball at the Rays game, and checked out the Bucks. $1 hot dogs and $1 Cokes at practice. Go Bucks. Nice new coach this year. Big Eddie Money rally here, right? Over the last year and a half. Baby, hold on to me. This bull is snorting. You got bullish. You called this, right?
Yes, the decline, yep. Sure
now how did you possibly see something like that coming? Did you use technical analysis, or what was your thinking back then?
What you've seen the past 3 years is everybody gets pretty excited in the spring, and then rumors swirl about a recession, the economic figures soften a little, analysts start lowering their earnings estimates, the stock market takes a dive. In 2011 it was a 17% dive, in 2010
after the downgrade. That was a big move right there. Here the expectation was central bank easing. We got the Litro, we got the Operation Twist. Did that just give us a head of steam that we've been surfing for the last 12 months or so here? Yeah,
quantitative easing has certainly had money flowing into the equity markets, and you basically started a buying stampede, which by my sense ended at the end of January of this year. And since then, I don't see where a whole lot of money's been made, even though the equity markets went higher into their May high. We started actually recommitting capital in May of this year, and I think it's going to be a repeat of the past 2 years. I think the recession is not going to show up. I think analysts are going to have to raise their earnings estimates again, and I think you're going to get a continuation of the rally on the upside.
You've had a 10% move here, right from the neatly from the 200-day average on the S&P 500 index. A lot of that was based on the idea that Bernanke would be going back to the QE3 well. And now that may not be necessary. We've had a better jobs report than expected in July. You think this market is a crack fiend that will only succeed if we get another round of easing out of the Fed?
I actually think the economy is in a self-sustaining recovery, albeit a slow one. Typically what pulled the markets and the economy out of their soft spot in your father's typical recession and recovery were housing and autos. And autos have done their part.
Yeah.
Since the nadir back in 2009, you went from under a 9 million annualized run rate to almost 15 million run rate.
Right.
The slow one has been housing and construction, and that's starting to come back. You've got record in terms of affordability, and you've got very low for sale inventory. So in St. Petersburg anyway, transactions are up 6 to 7% year over year, and pricing's up 8 to 10%.
Hard to find a brand new house, you're saying, right?
It's very difficult in St. Pete anyway. They haven't built any new houses in the past 3 or 4 years.
XHB that tracks the home builders, that's the ETF, it's up 100% since last October. So doing well in the home builders. And technology has been tearing it up. Here's the QQQ. You've got things like Apple and Cisco and Google and all the big non-financial NASDAQ names. Really been tearing it up. You like something, you like Qualcomm.
Yeah, we do like Qualcomm. We've got my analyst, my fundamental analyst has it favorably rated. It's got a decent dividend yield. They're getting the ramp up for the 4G and the LTE. They got a win in China, and you're going to see more product, if you will, or gadgets used in the new iPhone 5. Almost
a 30% move off the bottom in Qualcomm. Johnson & Johnson, it's like, what do they do? Just invent Band-Aids?
Well, a lot of the big stocks like Walmart and Johnson & Johnson's have been going sideways for 10 years, and yet their earnings line have been doing this. And so they actually appear relatively cheap when compared to the overall market. We have favorably ratings on both of those big behemoths.
A huge, and a 10% move is not a small thing for a big stock like Johnson & Johnson, but it's on the move. Verizon had a nice move, AT&T, although Verizon's kind of stalled out.
Well, telecom and utilities are as overvalued as they have been in the past 20 years. So I've actually been telling people to start chipping out and reallocating out of telecom and utilities into technology and some of these other
Hey, man, I noticed the same thing. For the last month and a half, we've been doing a dividend letter every day. You'd think I'd have one drug stock or one telecom stock, and I've not put anything in there like that. This will get you a little bit of a yield, RYN, Rayonier, or as you put...
Rainier.
Rainier.
Okay. Timberland.
So they own what? They own timberland from in southern Georgia, northern Florida?
All over, yeah. 2.7 million acres. That's a really complicated business. When prices are low, you let the trees grow. When prices are high, you cut it and sell it.
So it's a timber REIT, kind of like Plum Creek.
It's not like Plum Creek.
Okay.
It kind of is. but they also have a highest and best uses. They have 230,000 acres between Daytona Beach and Savannah that they break off and sell as development. It's basically commercial property.
Right.
But the thing that's really kicking right now is their Performance Fibers division up in Jessup, Georgia, where the plant is, and they make the highest grade cellulose in the world in terms of the filters for cigarettes, plasma screens, some of that goes in there. And the process is so secret and so much superior to everybody else's, they don't want to patent it because they don't want to tell the patent office how they do it.
So you believe that we're on a self-sustaining recovery. Bernanke, he likes to talk out in Wyoming at Jackson Hole. He's going there in about a week. You don't think that he's going to wow us with some kind of a brand new plan to inject liquidity and prop up markets?
Quite frankly, I thought he was going to do it out of the last Fed meeting because having grown up in Washington, D.C., just like the Supreme Court didn't want to be viewed as too political, so the Supreme Court flip-flop, okay? I thought that the Fed wouldn't want to be viewed as too political, and if they waited till the September meeting that close in front of the presidential election, I thought they might be viewed as too political. So I was surprised they didn't make some kind of statement out of the last meeting.
Well, maybe he really does care about inflation.
Inflation is a lot higher than the official figures suggest.
Indeed it is, and perhaps he wants to keep it. I mean, he wants to keep it from rising even further.
I think he actually wants inflation.
Well, he doesn't want deflation, that's for darn sure.
That's for darn sure.
All right, well, got some good picks here from the man, the myth, the legend, Jeff Saut.